Ken, good to have you with us. So what's the main elements of your bullishness now on Boeing in terms of their production rates and, I guess, confidence that they can get to them?
Yeah, hey, thanks, Mike. Good morning. So I would say it's a couple things. First, it's improved confidence in our view on the supply chain's ability to support what is a very strong demand environment. Now, I think the demand environment continues to surprise us to the upside when you look at recent order activity out of the Dubai Air Show, in particular for Boeing and its wide-body aircraft. But it's confidence the suppliers can support Boeing and its ability to execute to that is the first thing. And then second, we think as we get that better visibility and confidence in the supply chain, we feel like the setup into 2024 in particular is favorable as expectations, in our view, have become relatively more modest for the company and its cash generation. So we like the setup and we like the ability for better execution.
Just want to get into the makeup of this $275 price target because I was looking back. The only time the stock is traded at or above that level, 2018, 2019, free cash flow at the company was like 11, 13 billion a year. You're talking about next year being 5.5 billion up to 8.5 in 2025. So why do you think the stock is going to get that elevated multiple on free cash flow this cycle?
Well, a couple of things I would point, and that's obviously a great question. I think, there's not a lot of other large caps that provide the exposure to the commercial aerospace, OE build cycle. So there's some scarcity around that. Second, I would just point to the absolute growth in free cash flow, which I think is very attractive when you look at, to your point, the 3.5 to 4 billion this year to, 8.5. And our 2025 estimate is considerably below consensus, I would even argue. So there could be some upside to our numbers. And the third point, I just think there's some significant pent-up demand for the stock. I think Boeing has been tradable but not investable for a lot of investors over the last few years as we've dealt with a lot of the supply chain issues and other disruptions. And I think as we get better confidence and visibility in the free cash flow growth here, I think you're going to see some multiple expansion in our view to justify the higher price target just based upon the fact that it's relatively underowned in our view now compared to other large cap aerospace names.
But is there visibility on demand and deliveries in China? Because hasn't that been a big problem, the delay on MAX deliveries there?
Yeah, so unfortunately, that's continued to push out, right? I mean, so I don't think there's a lot of China necessarily in our numbers out the next couple of years. I mean, there's 100 of the legacy aircraft of the 250 that MAXes in particular, that Boeing still has an inventory that, the vast majority of those still built for China. Now, we'd expect a lot of those ultimately get remarketed and maybe end up with other airlines. So at this point, if and when China does start to resume deliveries of the MAX aircraft or accept deliveries, that would be incremental upside from a catalyst standpoint. But I think we've reached a point now where we don't necessarily need to see China come back in a meaningful way to get to the 25 free cash numbers we've got in our model anyway.
How does Boeing's defense business fit into this call? I mean, I know it's been a little bit of a problem to some degree on a relative basis.
Yeah, certainly. So we take a more cautious view on their defense business and certainly what's implied in the company's guidance. As you know, they've really struggled to get the profitability and the margin targets within the defense business with a number of development programs. They won when cost structures and pricing from suppliers were quite a bit different sort of pre-pandemic. So we think, as you think about their defense business, sort of $2 billion of that $10 billion or 20% of the 2025-26 free cash, we think it's probably closer to maybe a 10% contributor. So we discount that. And we think, though, if the commercial business works, in our view, sentiment on the stock should continue to work because that's going to continue to be the most important, in our view, for the valuation and the cash generation. Now, defense has been a headwind, and hopefully it becomes less of a headwind for sentiment. But there's clearly some serious wood they continue to need to chop in that business.